Hey everyone, Ben here and welcome to Motivation to Invest. In this video, I'm going to cover two high growth stocks in the electric vehicle or green energy industry. These are two stocks which I think have 10x potential for you in your investment. Now firstly, let's just level set. This video is not financial advice, it's not a recommendation to buy or sell a certain stock. And small cap stocks can grow a lot faster than large cap stocks, which is true, and that's why I'm investigating them at the moment. I did a full video on this, I'll leave in the description below. However, small cap stocks can also be a lot more volatile, so do expect large upswings and large downswings. But with that being said, I may have just purchased one of these stocks in this video, and the members of the VIP community were alerted. So if you guys want to get those early alerts also before these stocks run up massively, then check out that first link in the description below. You also get full access to my entire investment portfolio, and also as a limited time bonus, the first 11 people which sign up with that link in the description below, you'll get a free consultation with me to discuss your own personal portfolio and investing goals. So if you're interested in that, check out that first link in the description below. And also if you're new around here and you haven't subscribed yet, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. With that being said, let's get into it. Kicking things off at stock number one is CPS Technologies Corporation, ticker symbol CPSH. This is an advanced materials company which makes housing for power electronics, and this is not some new startup. This company was established back in 1984, so this is an established, reputable company. Now this company was actually formed as an MIT spin-out, so expect the management to be pretty smart guys. The company also has patented technology with, according to the CEO, around 11 patents the company holds. So this company creates advanced materials. For example, this company even managed to create a new material by merging together aluminium and graphene, which they say could have potential in the future. But at the moment, this company's main markets are high-speed trains and electric vehicles and heavy-duty electric vehicles. They also make this housing or case for high-end microprocessors. In addition, they focus on the satellite and avionics industry, as this company focuses on high-end reliability. Now, if you know anything about the electronics industry, especially in the US, you'll know that if it's a US defense company, they tend to want to purchase a lot of their products in the US for security issues. So one of these companies' customers is Lockheed Martin, the defense contractor. The company also has its product in 2 Audi modules, so that could mean there's potential for EVs in the future. Now, to put things into perspective exactly how small this is, the company only has revenue of $20 million. Now, an issue I did see with this is it was the same revenue as 2019, also around $20 million. However, growth is predicted in the future at 35%, which is incredibly high. Generally, I say a growth stock is one which is growing between 15 and 20% per year. 35% is incredibly high. Another positive of this company is insiders own greater than 30% of the company, and that's something you definitely want to look for when you're analyzing small cap companies. You want to see that the founders of the company, the insiders of the company, have some skin in the game, and if the company goes down, they go down with the company. But I don't imagine that happening to this company anytime soon. According to my research, the company only has one competitor, direct competitor in the world. This is a specialist manufacturer of this metal in Japan. However, the main competitor for this company and the main risk for this company I see is copper. Now, you may have seen recently copper prices have exploded. I actually did a video on this discussing copper and zinc, etc. And the main issue with this is if the world is going to be electrified completely, we're going to have more wind turbines, we're going to have more electric vehicles, etc., etc., etc. Every electric motor, every electric generator requires a heat load of copper. Now, this company actually makes this protective material for high-end electronics. Now, the difference between this and copper is it's much more reliable, better for transferring heat from these power electronics which generate a lot of heat due to their switching. However, the negative is it costs about 3 times the price of copper. An example this company gave is, let's say the copper base plate, this piece of metal, costs $10 for the copper version. Their version would cost $30. However, they did state that that would be on a piece of equipment which is maybe $1,200 in price. So really, it's not a major difference for some of these suppliers to switch over to their material in order to get better results for their customers. And with the Biden initiative, we can expect a lot to be spent on green infrastructure, on electric vehicles, on charging stations, etc. And even over here in the UK, I do recall Boris Johnson saying, after this whole global issue, we need to build back greener. So it seems politicians are clearly aligned with building back greener and going into more renewable energy. Now, the power electronics market is projected to grow at a 5.7% compound annual growth rate per year. So that's the industry growth I believe this company will benefit from. It will benefit from the green industry growth and the green technology growth, but their specific part of it is power electronics. Now, I used to be a former electrical engineer, so I do know quite a lot about this, but I'm really just going to break it down simply for you guys. Now, a potential catalyst for this is more high-speed trains, which are supposed to come online in China. That's a major catalyst for this. So I know what you're thinking. This seems like a great company. It's got a lot of tailwinds behind it. It's a small cap company, so definitely it will fly very, very soon and very, very fast. However, is the valuation high? Well, luckily, it's not that high. So the price to sales ratio is only 4. So you're paying 4 times the company's sales, which isn't too bad. The company also became profitable this year, and the current ratio is a 2.59, which is fairly good. Generally, I look for at least 1.5 to 2. 2.59 is pretty good. So what risks do I see of this company? Well, firstly, it's a micro-cap stock. It's a penny-cap stock. Expect major volatility. Expect wild upswings, wild downswings. You get one institution, if they start to buy into this stock, it will definitely double, triple in price. Or if you get one institution sells out the stock or people start to sell out the stock, it can drop in price. That's the volatility you can expect with penny stocks. That's why I wouldn't recommend anybody invest a large amount into any penny stock. It's just too risky. However, they are very interesting to analyze and they can get major gains very fast. However, for me, this one would be a long-term investment. Now, another risk I did see is foreign products. So a lot of electronics now, a lot of everything is made in China. For people in China, they'd have to say, okay, we need to import this material from the US to China in order to add it to our electronics. Or we can just make our own version of it, and the patents probably won't even hold up in China because China just does its own thing. When it comes to copying other companies, there just seems to be no rules there when it comes to manufacturing. So I do see China as a big risk on the materials side and undercutting their products with lower prices. However, if the company wants high performance, high reliability electronics, then they may wish to go to this company and purchase their material. Now, another risk I saw, it's more of a personal thing. I was watching the CEO do a talk and he seems very engineer minded, very technical minded, and there's nothing wrong with that. But to me, that might say, does he have the sales acumen? Does he have the business acumen? Does he have the ambition to grow the business to substantial levels? Because I'm a former engineer, I know what engineers are like. They fall in love with the actual process, with, oh, this is amazing, look how great this works. But for the people buying the product, they just care about what's it going to do for me, how much better is it than the competitors, what's the cost. That's really all they care about. They don't really care about all the other stuff necessarily as much. And following on from that, Elon Musk recently said, I believe this was in an email, he basically said they need to cut costs on their electric vehicles in order to produce their mass market model and bring electric vehicles to the world. So he's talking about saving pennies. And this company's material, it will cost pennies more. So would a company like Tesla and Elon Musk say, okay, we've got copper as our material now, we can pay 3 times more. It's not a massive amount per car, but it's still a little bit extra per car in order to get this better reliability. Or will they want to just stay with copper? And I think on the electric vehicle side, they may just want to stick with copper. But that doesn't mean this company doesn't benefit from the market, because I think higher end electric vehicles, more powerful electric vehicles, potentially commercial electric vehicles, electric trucks, maybe the Cybertruck, those type of electric vehicles, I can imagine those and high performance electric vehicles definitely wanting to use a product like this, in addition to all the green energy infrastructure, wind turbines, etc. So that's the first stock, very interesting stock. I recommend you guys put this one on your watch list and check it out. Now, the second stock I'm going to go into really briefly. This is another very interesting one. This stock is called Beam Global Stock, ticker BEEM. Now, this company is a micro-cap company again. They work on EV charging. They have what's called an EV Arc, which is a solar-powered charging station, which they say is patented by them. They also have a patented drone recharge station, which is powered by solar. So a lot of interesting stuff there. I can imagine a company like Amazon using that in the future when they want to deliver parcels via a drone. They can charge it at one of their stations. Diving into how small this company is, it has a $500 million market cap, so around $500 million. Revenue forecast growth is 44%. Now that is exceptional. Like I say, growth stock, I look for around 20%, 44% exceptional. The company does have negative cash flow from operations, so that's a risk there. The company's burning around $300,000 per month at the moment. So that means with the current cash on the balance sheet, which I calculated, they've got around $12 million of cash on the balance sheet. They have enough cash for around 3 years. So this company needs to start making money in the next 3 years. Now, 3 years does seem like quite a long time given all the tailwinds behind the green energy industry. So it does seem like it's got a great chance. The company only has $300,000 of debt, very low compared to $12 million of cash. Now, this is a very interesting company. The valuation, though, is extremely high. So at the moment, we're looking at 124 times the company's sales. That's what this company's trading at. To me, the company's priced a little bit too frothy right now, given that the company only has $5 million in revenue. Now, I know people who earn more each and every year than this company. So diving into share price first, we can see the stock was around $12 per share in September, and then it's ran up by 478%. Wow. So that is incredibly high. It's gone up incredibly fast. Like I mentioned previously, if you want early alerts on stocks like this before they run up, then hit that link in the description below for the VIP membership. But yeah, it's up by 400%. Where's a good buy point right now? So I've put a Fibonacci retracement on here. It is overextended above the moving average, which is this blue line here. So from the Fibonacci retracement, we're looking at the first correction which happened with this stock. It hit a buy point support of around $50 per share. So that's the first buy point I'll be looking at with this stock. Second buy point, $25 to $30 per share, which I don't think it will reach unless some major news comes out. But if it reaches those levels, then I think definitely it's a great opportunity to load up on this stock at buy point 2. Buy point 1, you could potentially open a small position. And like all my videos, this is not financial advice. I think stock 2 is a bit overvalued right now. I'd wait for a pullback. Stock number 1, I personally think is good value right now with a price to sales of just 4. With that being said, if you guys found some value in this video, please give it a big thumbs up. That helps out tremendously with the YouTube AI. I really do appreciate it. If you guys want to help the channel out a lot, I don't know if this complies with YouTube, but if you just go back to the past 10 videos and just like all the videos, that will really help the channel out a lot. That's some major hack I've just thought of right there. If you're new around here and you still haven't subscribed, hit that subscribe button. Turn that notification bell on. If you want to check out the VIP group, first link in the description below. I made a full video. And with that being said, I hope you guys have a wonderful day and I'll see you in my next video. Invest safe.